Paying tax on dividends in 2023-24. Here we look at the tax impact of taking dividends in the 2023-24 tax year. For all the details, see our blog, Paying Tax on Dividends in 2023-24. By understanding the rules and regulations surrounding dividend payments and exploring tax-efficient strategies, you can continue to optimize your overall tax position without any unexpected tax bills. Understanding dividends. Dividends are a tax-efficient method to receive income, as they are exempt from national insurance and are included in the personal allowance. Eligibility for receiving dividend payments. There is no limit to the size of the dividend payments that your company makes to you, and depending on your share structure you may be able to pay different amounts to different shareholders. However, it is absolutely critical to understand that dividends can only be paid from company profits. Dividend allowance changes for 2023-24. The dividend allowance was cut in half to £1,000, which means you may need to pay tax on a larger portion of your dividends. Calculating dividend tax based on income. One key aspect of this is when looking at your overall income, to determine your tax band, your dividend income always sits on top of all other forms of income. Let's say Jamie works through his own limited company, and he plans to receive the following income: A. Salary of £9,096, B. Dividends of £42,000, C. Rental income, profit, of £12,000, D. A profit of £5,000 from selling his Tesla shares. From the tax calculation in our blog, a payment of £42,000 in dividends when factoring in the other forms of income will create a tax liability of £6,794 for the dividends and £1,705 for the property income. Strategies for tax-efficient dividend payments. The payment of a small salary and then dividends from your limited company is the cornerstone tax planning strategy for most contractors. There are, however, various tax-efficient strategies that contractors can explore, such as dividend tax band planning, and also EIS, SEIS, and VCT schemes. Paying dividend tax, self-assessment submission. Dividend tax is paid through the self-assessment submission process. The deadline for the submission of your self-assessment personal tax return is the 31st of January after the tax year end. Any taxes due must also be paid by this date. For example, for the year ended the 5th of April 2024, your personal tax return needs to be filed, and any taxes paid, by the 31st of January 2025. Summary. Despite the reduced dividend allowance, there are still tax-efficient strategies and investment options available to help minimize your tax liability. By understanding the rules surrounding dividends, staying informed about changes, and exploring tax-efficient strategies such as EIS, SEIS, and VCTs, you can continue to optimize your overall tax position.